Hello and welcome to a VSA Capital video. I'm Oliver O'Donnell, Head of Research at VSA Capital, and today I'm joined by Tom Lamb, CEO of Myriad Uranium Corporation, one of the newest uranium-focused companies in the world. Today we're going to look at mining in Niger, the company's assets, and the uranium market backdrop. As ever, if you enjoy the video, please like and follow. Tom, it's great to speak to you. How are you and how are things at Myriad?
Hi, Ollie. Thanks for having me. It's great to see you. Myriad's great. We're very excited about the future. We've got the uranium market itself. This is a great thesis and a great story right now. And Myriad is a small and ambitious company that's got great assets, and we're poised to do exciting things. So, things at Myriad are very good.
Great. Well, it's great to have you here as well. Perhaps you can give us a sort of 1 minute summary of the company and
Sure.
Yeah. Go.
Well, we're a relatively new uranium junior. We're an explorer. We have over 1,800 square kilometers of uranium licenses in the Timor Basin in Niger in West Africa. Timor is one of the world's great uranium basins. Our four licenses, so the 1,800 square kilometers is spread across the four licenses. The four licenses were owned by the French, Areva, effectively state-owned, for decades, and they did regional scale exploration of these licenses, but then they had to exit. And these licenses are right up against and on structure with some of the world's, and certainly Africa's, best and biggest and richest uranium deposits. So our northern license, for example, is adjacent to and on structure with Africa's largest uranium deposit and the world's second largest. That's Immereren. We're also just down the fault from Global Atomic Stasa, which is, I think, Africa's best deposit, and et cetera. Our licenses are in really good spots. We definitely have uranium, and we're much more than just a small greenfield junior.
Excellent. Well, let's start with Niger. As you mentioned, it's an important player in the uranium market, but a lot of investors who aren't familiar with uranium perhaps aren't familiar with investing in Niger and probably know it from sort of the wrong sort of headlines. So
Sure.
Perhaps you can give us a summary of why you picked Niger as a jurisdiction to get involved in, and some of the background to the country.
Sure. Well, Niger is surrounded by unstable countries. There's no doubt. You've got Libya, Algeria to the north, and Chad, Mali, Burkina Faso around the outside. But Niger has the uranium, and its uranium basin is extremely rich and exciting. Everybody is focused internationally, the Americans, Europe, the Nigerians themselves, focused on security. And so while the region is complex, Niger itself is a really good jurisdiction. It's had two big Canadian, in particular Canadian foreign investors operating there since 2007, 2008. And number one is GoVX. That's a success story. They have the Madaouela project. Number two is Global Atomic. They have the DASA project, which is a really strong uranium project that's going to be a mine here shortly. So, and these companies have done well. They've been strongly supported by the government. They've made lots of money for their investors. They've gone from around our market cap, $7-8 million, all the way up to hundreds of millions of dollars. So there are these companies that have led the way for us. Niger, the uranium basin, is also very secure in that, like I said, Americans, Europe, government are committed to its security, but it has America's largest Air Force base. It's located in the uranium basin. Security is important, and they're making sure that the basin is secure. It's a good place for foreign investors. It's a bit like, in my view, it's a bit like newfound gold in Newfoundland. They went and made a major discovery in Newfoundland, and everybody rushed in. and realized it's an exciting place and an amazing place to look for gold. Well, the same thing's happening here, and Niger's Timirsoy uranium basin is getting hot. It's going to be the destination. Niger is the fifth largest producer of uranium currently, and it will soon be the world's second largest uranium producer after Kazakhstan, and that's a really exciting stat. So yeah, Niger, it's a very cool place to look for uranium right now. Yeah,
and this is obviously something you've been building for a while. And how have you managed to come by 1,800 square kilometers of projects when you look at some of the other names that you've mentioned? Global Atomic, I think, only has 600 kilometers squared. GoVX is similar, but 1,600, and ENRG are about 700. So how have you come up with such a large land package?
So I have to credit my predecessor. I've been CEO since November of last year. The gentleman who put this deal together is my friend and colleague Pete Smith. He's a really smart guy. He went to Cambridge University with some people who are connected to the owners of these licenses, and he started negotiating to acquire these licenses, or at least the 100% option over these licenses, which we hold, about a year and a half ago. And this is before uranium got hot again. We would not get this deal today. And these folks, they put this package together. They acquired these licenses as Areva, and well, now Orano. Areva is the predecessor entity, which had explored these licenses for decades, as they were relinquishing these licenses. So Areva had all sorts of financial problems. It's effectively the French government branch, state-owned uranium company and nuclear company, French nuclear company. And they went bankrupt, however many years ago, 10 years ago. This is after Fukushima, $19 uranium, political problems, etc. So they actually had to relinquish, or they were instructed to by out of Paris, it's my understanding, relinquish these licenses. And we're quite certain they did. The geologists and the people who are familiar with these licenses did not want to. I'll explain why. But what can you do? You've lost. You've got to restructure $5 or $10 billion. So the Areva / Orano relinquished these licenses. Our partners grabbed them as they were let go, and so it's a series of fortunate events. Our partners grabbed the licenses, and then more recently, Peter negotiated the deal to acquire the option over them, and those are the steps. These are extremely prospective licenses, and I'll explain why. And but that's how it all came about.
Yeah, and so as you mentioned, these are all on the key structures, and I think what's perhaps even more interesting is that in each license there's a major fault junction.
That's right.
Perhaps somewhere that each of these peers that we've just mentioned probably wanted to explore, but clearly these licenses were all locked up and are now coming to market for the first time.
You've got it. Yeah, this is. For example, our northern license, Ajobout, it lies just north of Africa's largest deposit, on the same fault, the Arlet Fault, a few kilometers north, and it was owned by Areva, /Orano, which now holds, again, Imararan, that's 384 million pounds of uranium just south of us. They owned this license and they explored it on a regional scale, and throughout our licenses, they did 28,000 meters of drilling, lots of airborne geophysics, et cetera. They found uranium. About 20% of those boreholes found over 100 ppm of uranium. And the French, by the way, this is a side point, but they never drilled deeper than 300 meters in the basin because they were just looking for sandstone, roll front deposits style. Anyway, so we have this northern license. And right next to Africa's largest deposit, it's also sandwiched just south of GoVX's claim block and their Matawela project. And the French had plans to do intensive exploration of our license. We have those plans. At this fault junction, which you mentioned, they were going to drill 65 boreholes, and we have their plan to do that because they wanted to see if there's a continuation of Immereren to the north of Africa's largest uranium deposit to the north. Well, that's our license. We've got it. So we have their data, we have their plans. And as you mentioned, it's at the fault junction that we're going to target. Oh, pardon me, one of the shakes. It's at the fault junction of the Arlet Fault, which hosts Immereren, and incidentally, Somer and Cominac, the operating Orano mines. Well, Somer is just to our north, and the fault junction that goes off to Matanuela. So we're at that intersection, pardon me. And, it's an exciting license. We're doing flying geophysics over it starting in a couple of weeks. And, lots of plans for that. And then we'll be drilling in the fall.
And before we get into the sort of catalysts and things, at Immereren, Orano had quite a significant announcement recently that they plan to spend some money on evaluating the possibility of in-situ leaching, which has been a big breakthrough for the uranium industry.
Massive.
What does that mean for Niger?
So, this could transform the basin, transform the country. Kazakhstan mines using in-situ leaching, in-situ recovery largely, and it's extremely low cost, ergo very profitable. And if it works, and it looks like the French have been doing hydrological testing at Immereren, just to the south of us, a few kilometers. They've been doing hydrological testing for a few years. That involves, testing porosity, permeability, and where everything flows once you inject CO2 plus some other things, carries the uranium. The French have announced they're investing 85 million euros in situ recovery test work, which is, this is a big program. This is in situ recovery mining. And if they're able to do that successfully, and we're optimistic, you do not need underground mining, open pit and underground mining of high grade uranium in order to be profitable anymore in this basin. This is, you can have low ppm, high volume deposits. They're suddenly extremely profitable. And that's what Niger holds in this basin. Roll front sandstone style deposits, near surface, lower grade, disseminated, extremely profitable. So that's what that means. As one of our experts, David Miller, mentioned, he used to work for Areva a long time ago. He's a worldwide acknowledged expert in situ recovery. He's on our technical committee. As he mentioned, this, he just puts it, this bodes extremely well for us, for Myriad, and our, in particular, our Ajibout license just north of where this in situ recovery work is going to be done. It's a big investment, by the way. 85 million euros for this is a huge investment and a big endorsement of the country, of this license area that we're connected to.
Yeah, absolutely. Most mining companies might spend a couple of $1 million on a metallurgical test work program. So nearly 100 is huge.
That's right.
And then looking at some of your other assets and how they compare to the peers, GoVX is sort of fits into that lower grade style that you mentioned, but there's also high grade mineralogy that's been defined by Global Atomic at DASA, and some of your other licenses are a bit closer to them. So is that something you expect to be able to find within your license areas?
That's right. So I just spoke about our northern license, Ajibout, where the French drilled just down to 300 meters. There, at that point, there's a layer called the Carboniferous layer. I'm just generalizing, and then other older rock layers. Well, Global Atomic, a little ways to our south, to the southeast of that northern license, the west of our other licenses, or sorry, to the east of our other licenses. They went deeper. This is about 10 years ago, and they made high-grade discoveries with grades that are closer to what you find in the Athabasca, up to 13% uranium, for example, over short distances, 3% over 46 meters. These are incredible grades. And we are close to that, very close to that deposit, that Global Atomics DASA deposit, and on the same structure. And the French, just before they relinquished their licenses, they understood what was going on over at Global Atomics project, and within our license area called AFUDE, this is our middle license of the four, sort of going from north to south. They realized that they were going to have to drill deeper to find this high-grade stuff, high-grade uranium. They never quite got to it. So, I'm jumping around a bit, but I'll mention that it's really important to understand the French only drilled to 300 meters throughout the basin. They were looking for these low-grade sandstone deposits, but deeper is potentially very exciting high-grade uranium like Global Atomic found. And so even in the north, just next to Africa's largest deposit, yes, we're going to look for Imararan-style mineralization and hopefully find what we are going to call Imararan North at down to 300 meters. But we're also going to drill deeper and look for DASA-style deposit, which would be, high grade in the faults, in these uranium traps in the faulting. And there's, I'm speaking not without using too many technical terms there. So that's that. So this Global Atomic DASA is exciting, not just because of, down the fault where we are and our down the Azusa fault and at our AFIDE license, but throughout all of our licenses. Now there's a new thesis here, which is you can look at the surface like the French did and get mineralization in the sandstone. But Global Atomics DASA has shown us that we look deeper, we may find high grade like Athabasca. That transforms the economics also, different way than the in-situ recovery. We're extremely excited. So our southern license, I'll come back to this point. Our southern license AFUDE lies along the Azusa fault, several kilometers down, about 19 kilometers from the Global Atomic deposit. The fault runs into our license, intersects with the Arlet fault, which just to the north hosts Africa's largest deposit. So we've got Africa's largest deposit just to the north of that license, and its best deposit, Africa's best deposit, in my view, Global Atomics DASA, just to the east. The faults that host those two deposits intersect within our license. We can drill and try to duplicate and replicate the deposit or the discovery that Global Atomic made. Ollie, Oliver, do you mind if I speak to just the economics of these two of the projects? So Global Atomic.
Yeah, absolutely.
Yeah, Global Atomic up the fault, up the Azusa fault from us. I mean, it's got 250 million pounds of uranium. That's an enormous deposit. But its feasibility study from a couple of years ago was at about 4,500 ppm. And the economics on that at $35 uranium, note we're at about 52, 53 right now, $35 uranium with an $18 approximately all-in sustaining cost of production. The economics of that are fabulous. That's a 23% IRR at $35 uranium. Well, at $52 uranium, that deposit just to our east has outstanding economics. And so that, we're gonna go for that, and it's that's the potential here. This is, and that company just down the fault from us went from our market cap, 8 million approximately, up to multi-$100 million market cap, 500, 600, $700 million market cap. And that's the potential here. It's extremely exciting. I could go on all day, as you can tell. And we have so much more to talk about. We'll have to get into these other things in the future, of course. But
I think those MPVs far in excess of the upfront capex of sort of 300 million. So
that's right.
look really good on other metrics as well. And you've still got two other big license areas as well, also along the same structures with DASA. So how should we look at these in an order of priority, and what does your work program look like for the next 12 months or so?
So we have two southern licenses, Tagait 2, Tagait 3. As you mentioned, they're big, beautiful licenses with lots of prospectivity. They've seen drilling. There's definitely uranium there. The French intersected uranium that matches up with the faults. So we'll be active in those southern licenses in the future. Also potential to joint venture them, et cetera. But step one, we are doing high resolution drone mag geophysics starting in a couple of weeks. This will be over the northern fault intersection at Ajobout. This is where the Arlet and Madawaela faults intersect. We're going to be doing 50-meter spaced drone mag. That starts shortly. And then we're also going to do the same thing, 50-meter spaced drone mag over the fault intersection in our central license. That's Afude. That's where the Azusa fault and the Arlet fault meet. So we have drone mag coming up. Soon after that, we'll be doing IP and AMT. These are electrical methods that penetrate, and we're going to get a view of the subsurface. We're going to take the drone mag, the IP, AMT information, and we're going to overlay that and integrate it with the existing data that we have. We have lots of data from the French, from Orano and Riva, that's worth millions of dollars. They did great work. We have their data. We're going to put all that together, and we're going to pick drill targets. And the plan is to drill starting October 1st. So we will, we'll be drilling, and we'll see how many meters we decide to drill at that point. But we have, plan to drill these fault intersections that are northern and our central licenses in the fall, and then we should start having results, soon after as we send things to the lab. So that's our upcoming exploration plan. We could be making discoveries very quickly, at both licenses, and that would be, extremely exciting, obviously.
Excellent. And I guess the backdrop to all of this is the uranium market, which has had a step change since COVID. The spot prices have increased, as you've said, to sort of into the 50s, having been in the low 20s prior to that. And those prices haven't really dropped back since the recent sort of turmoil in equity markets, but the whole junior uranium sector in the miners has had a significant de-rating. So what do you see happening in the uranium market? What do you think the sector as a whole needs to have to re-rate to where it was, sort of 6-12 months ago?
Well, that's a good question. I mean, the fundamentals, they say, are extremely strong in the market in terms of supply demand. The world has 400 big reactors. They're building and planning 400 more. These are the big reactors that use a lot of uranium, and the small modular reactors are going to be coming on. Those are going to suck up a ton of uranium. So, those are sort of that's in terms of demand. Supply is really interesting, and so this is, there could be triggers here that lead to giant leaps in the uranium price. You got issues with Kazakhstan. They need to ship a lot of their uranium, most of it, out through Russia and out of St. Petersburg, and there's processing and everything that happens. Well, that's being cut off and altered as Western utilities stop or reduce the buying out of Russia, and we're going to be looking at other sources. So that's going to leave sort of the Indians and the Chinese buying out of St. Petersburg, and the Western utilities are going to be looking to other sources. Well, what are those sources? How are they going to get it? They're going to have to bid up the price of uranium in order to get the uranium they need, if they're going to move away from buying from St. Petersburg. It's just one of many issues, and the Kazakhs, to get their uranium out, they have to go other ways through the Caucasus, et cetera. That's a low capacity route. There's supply issues looming that could trigger, price rises and dramatic price rises anytime. There are lots more. The Chinese are building up a physical uranium stockpile on the border with Kazakhstan. Kazakhstan itself building up a uranium stockpile. You've got other buyers of physical uranium, Swiss fund. You've got the Sprott fund, SPUT, et cetera. There's lots of people coming in. Maybe there's not enough uranium and not enough uranium for the West. And when these things bite, uranium price could spike. And we're all in this too, because we know what happens when the uranium price spikes and demand and supply imbalance happens in the uranium market. Equities and junior equities, they go crazy, and a lot of money pours into a very small market and group of equities that are available to invest in. And that's why a lot of people are involved in uranium right now. One of the reasons. It's extremely exciting. Yeah,
indeed. I guess one last question before we finish. One of the key things about the whole energy transition and uranium's renewed interest is in sort of improving the environment. So how does a small company like yours get it with relatively limited resources? How do you get across that you are an ESG relevant company and can actually commit to some of the standards that some of the larger companies do relatively easily?
Oh, that's a good question. Well, first of all, it's in our DNA. We're, Canadian company, Canada listed, with board members, myself, leadership, Fred Bonner, a senior Canadian geologist who's, recognized around the world for his, social responsibility, community and environmental focus. And others. We've all worked on projects with very high ESG standards, and we intend to maintain those. Small company, but with an environmental and community and social focus. I worked in East Africa the last 11 years, largely running some companies there with my colleagues, and ESG was central to what we were doing. In fact, it was a big part of the thesis and what attracted investors, and we're really proud of that. We're going to carry that over to what we're doing in Niger here at Myriad Uranium. So, it's going to be a big part of what we do.
Excellent. Well, it seems like there's a lot to look forward to, both in the uranium market and also with your catalysts in the second half of this year. So thanks very much for giving us your time and explaining the company to us and what's ahead. We'll look forward to.
Yeah, great. Oliver, could I add something just at the end?
Of course.
It's about the share structure. We're a little bit unique in a few ways. We have 26.5 million shares outstanding, which is not many, but 10 million of those are held by our core group of management and founders, et cetera. And we're all in this for the long haul. And our partners locally have 8.5 million, so that's 18.5 million. They're a control person, et cetera. They're also here with us, wanting to make discoveries. And most of the rest of the shares are owned by people who we've known a long time. They're part of this with a vision for the future. So this is sort of not a deal with lots of shares outstanding that have not been paid for. We've all paid a lot of money for our shares. Most of my shares acquired at 20 cents, 25 cents, and up at 30 cents. And that goes for our group. It's a little bit different than a lot of companies. I wanted to mention that, and people are, by all means dig into that. You'll see. So it's an important factor. I would like to be aware of.
Something that actually in London often gets forgotten about. Canadian investors have it as much higher priority, but to have that local element as well is really positive.
Yeah, that's right. Yeah, our local partners, big shareholders too. So it's a big advantage for us. We're all aligned. Yeah.
Brilliant. Well, on that note, we'll call it a day. Thank you very much, Tom. Speak to you soon.
Thanks, Oliver. Yeah, see you soon. All the best. Bye-bye.